so I'll have to grow into that one, but thank you for that. I don't think I can move away and keep control of the slides unless there's a gizmo. Is there a gizmo, or?
That could be your clicker.
Is there a mobile one?
Someone can click it for you.
Oh, that's right, no problem. So I'll be a little bit trapped. I guess I'm trapped at the mic too. Can everyone hear me right? So anyway, first of all, it's really a pleasure to be here, and exciting that there is a growing energy on college campuses, undergraduate at the undergraduate level, about this idea of a new economy. I came to this really through a kind of a rolling epiphany, I like to call it, and I spent nearly 20 years at a little bank called J.P. Morgan, which when I left it, actually, it was right after the merger with Chase, maybe 6 months after the merger with Chase in 2001. And by the way, I always like to get that out early so that people can't blame me for the financial crash and everything that went along with it. But I left Wall Street in 2001. And right before the merger, Morgan had something like 15,000 employees and a balance sheet of $300 billion, which at the time seemed like a big bank and a big company and a big balance sheet. And of course, today the bank has a balance sheet of about $2 trillion, I think a little over $2 trillion, and God knows how many employees. So it's a place that is somewhat unrecognizable to me, as much as it probably is to most of you in this room. But before I kind of get into my comments, I thought I would give you just a few brief remarks on sort of my own journey to this new economy work. A lot of times, people look at me and they say, how did someone like you end up doing something like this? And I know, everyone, at least those of you that are students, have on their mind, where am I going to find a career in this new economy? And that's not where am I going to find a career, period, is a challenge in these economic times. And secondly, where am I going to find a place in this new economy? And I think that's a real challenge. Both of those are real challenges, and not to be belittled. But perhaps my own experience is a bit of a light toward that challenge. And it's interesting, Alice, your first slide had a picture of Wall Street and the building I used to work in, as well as a scene from the Berkshires. And a lot of my rolling epiphany, a big influence on it was reading E.F. Schumacher. I did that after I left the bank, and it was really not his Small is Beautiful, which is a must-read for everyone in this room if you haven't read it, but his last book that he wrote before he passed away, which was called A Guide for the Perplexed, which really grabbed me in. And of course, it was sort of, that title suited very much to me at the time. And so I got in my car and I drove up to the Berkshires, and I met Susan and Eric, and the first thing they started doing was telling me all about Berkshires. And my initial reaction was, this is cute, a little bit silly, but sure, if Schumacher thought this was a good idea, then I'm all ears. So I kind of got my sea legs in this new economy from my friends up at the Schumacher Society, and even from friends I have now at Schumacher College in the United Kingdom. But my own path to this really came as a result of sort of a growing discontent with what I saw happening in finance, and I couldn't really put my finger on it, other than I found myself less and less satisfied, less and less fulfilled, and very much off track from where I thought I started, which was, when I was an undergraduate, I was an international relations major, and I had this great professor who taught a course called The Economics of International Relations. And the thesis was that economics was going to determine the course of international relations in the future rather than politics. So I switched my major to economics, figured it'd be a good idea to go work at a big bank. Morgan was good enough to have me. And I was there to sort of be part of this global international system, and really the thought of, this is a place to make money, honestly never entered my mind. And of course, if today people think about going to work on Wall Street, there's pretty much one thing on their mind, At least it may not be the driving factor, but it's certainly on their mind. And so I found myself kind of getting further and further away from the reasons why I started this. And I got lucky. Morgan got bought by Chase. We called it a merger, but Morgan was acquired by Chase. My stock options vested. I was burnt out, and I just left. And it was the most amazing experience because it sort of gave me space to think and learn and read and speak to people I wouldn't have. And in that process, I learned about the environmental crisis as a systemic issue rather than sort of a one-off, well, the whales, the owls, the trees. And then I started reading things like Schumacher and Limits to Growth. And as a 20-year veteran out of the financial world, it kind of dawned on me that, as I think Bob said earlier today, in the first talk, compound interest, which is the heart of finance, is from what I can tell so far, and I've been thinking about this for a long time now, in irreconcilable conflict with the laws, not theories, the laws of thermodynamics. And so our entire economic system, I've come to believe, is as great as it's been for the last 200 years, and despite all of its challenges and problems that it has for the last 200 years and certainly the last 20 years, it actually can't physically go on the way it is today, given the scale of the human economy and this finite scale of the planet. And this is like the biggest challenge in the history of civilization, and most people are still asleep about it. So on the one hand, it's overwhelming and depressing and scary. And on the other hand, it's really a fascinating time to be alive. And so that's the spirit in which I have kind of gone after this, call it my second career. And if I have how does that connect to you all at age, roughly 20 and looking to build your own career? Well, my path to this and the impact investing I'm doing now really happened as a result of my own curiosity and through this process called synchronicity. And when I was coming out of college, there were lots of companies that would come and interview, and you went and interviewed all around the place, and you knew that you get a few job offers and you'd figure out which place you wanted to go work. And obviously that doesn't work today. But I spent 20 years pursuing something that I thought was where I wanted to be, and as it turns out now, I sort of was willing my career on myself as opposed to being more open to a more natural path. And I think you all are going to be forced to listen carefully to a different and an unconventional path. And if you find that at age 20, you're 20 years ahead of me where I was. And the anecdote I'll share with you is that my first attempt at writing in this new world is I wrote an essay called The Relevance of Schumacher in the 21st Century. And I spent months on this thing. And I've gotten a lot of good feedback on it, and if you're interested, you can find it on our website or on the Schumacher website. And that essay found its way to Zimbabwe, and a man named Alan Savory read it and called me up, and we've since become friends and since become business partners, which is where I'll end the talk. And that may be just a coincidence, or that may be something that people call synchronicity. But if I have one bit of kind of remain optimistic, it's all going to be fine message for you, it's that if you follow sort of your gut and follow these coincidences that happen, and there's a book called Synchronicity if you're interested, I am very confident you will all find your own personal path into this new, crazy, chaotic, scary, unconventional world that is the new economy we're entering. The second idea is this idea of collaboration. I'm convinced that that's the heart of this new economy, and you all do that much more naturally than people my age and older. And the third one is an idea that I'm throwing up just for fun that maybe you haven't heard of, which is called ecotones. And one of the kind of cornerstone ideas that I have is that if we're going to find our way to this thing called sustainability, it's going to be by learning from, mimicking, and becoming part of nature. Nature's been around, as Janine Benyus likes to say, for 3.6 or something billion years. It's learned a lot about how to be sustainable, and we ought to be humble and learn how it works and try to sort of fall in place with it. And ecotones in nature are where ecotone means ecology and tension. And so where different ecologies intersect is where creativity and life happens. So like the edge of a forest and a grasslands, or a river and an ocean. And again, this ties in with collaboration, but working across transdisciplinary boundaries in education, public-private philanthropic boundaries in the economy, that's where the juice is happening. And so those are my little ideas for sort of your developing story. And interestingly, a friend of mine just sent me this chart. This is from a recently released study that IBM did, and they have a massive consulting practice, and they have access to, CEOs around the world. So this is 1,700 CEOs ranked the qualities that they look for in hiring new employees, and what will guarantee their or have the best chance of their success. And collaboration, communication, and creative are the top three. And by the way, CEOs aren't often high on curiosity. If you're curious, you often are not a CEO, because CEOs can't be curious; they have to be extremely focused. So I wouldn't expect that one to be up there. Although creative is obviously a related one. So anyway, that's my little story, and hopefully a note of optimism about the future in this new economy and in the current economy, which is not pretty. So turning to finance, I do write a blog called The Future of Finance. I really enjoy the writing, and do encourage you to not only read it but engage in it. There's usually a pretty sophisticated conversation going on in the blogs, and I try to sort of key off something that's happening in current events and address it through the lens of this sort of regenerative economy, sustainable finance, whatever lens it is that we're trying to foster here. And I could talk for days about what's wrong with finance, and hopefully I'll stop before we run out of time, and I'd really rather respond to questions than sort of try to figure out where to start in this whole morass. I think Wendell Berry, anyone familiar with Wendell Berry? If you're not familiar with Wendell Berry, read Wendell Berry. It's amazing how a poet can, in one sentence, kind of cut to the chase here about what's wrong with our economy. But I believe this is true. I believe our economy has become a financial system, and we don't even really know it. And so we're sort of blind to that, and just sort of think that that's what we do as normal, when in fact we've totally confused means and ends with all kinds of really unjust consequences and dangerous consequences. But what I will say about the financial crisis, the chaos, the greed, the fraud, the unpunished fraud, the too big to fail, is that from my perspective, and I lived like really deep in this world. I mean, I was, I ran a bunch of mortgage derivatives businesses before that became a dirty word. That's one thing I like to say. It used to be okay, now it's not. And I was Morgan's person on the long-term capital oversight committee that bailed out this failed hedge fund that had a bunch of Nobel Prize winners in it. So I'm really familiar with what happened and what was going on. And I was shocked when I started reading in the newspaper about the complexity, the scale, and the what's the right word? The violence of the financial business. And I truly was shocked. And I can assure you that many people, kind of my colleagues, people older than me, kind of woke up, and there was this 10-year period that literally, and this is not, I'm not saying this because I left, but it literally, something sort of switched around the turn of the century. And the behavior got crazy. It's kind of like an exponential curve where it just kind of went nuts. And it's not to say that the place was perfect before that, but it wasn't always the way it is right now, and it is right now out of control and remains out of control. And there's lots of work to do to rein it back in. But But I don't think it's worth getting into sort of all the technical details of all that. I think that's less interesting than what I'd like to talk about. What I'd like to talk about is at a much more conceptual or fundamental basis. And I think the biggest problem with all of the well-publicized problems in finance is that they are a massive distraction on the public's energy to deal with the financial sector. So we're running around with our fire trucks shooting out fires and trying to figure out how to rein this thing in, which makes it impossible for us to sit back and think about what we should really be spending our time thinking about, which is this fundamental systemic crisis that exponential growth on a finite planet doesn't work, and finance is the theory of finance and the practice of finance is, in a sense, the engine that's driving this system. And no one's spending time really questioning it, because they're spending their time questioning, why did the market crash? Why didn't anyone predict the market crash? Why did those guys steal from those guys? Why are those guys bad guys? How come those guys are in jail? And it's all complicated, and most people don't want to deal with it because it's so difficult to understand. So stepping back from all that, even if everyone that worked on Wall Street were Cub Scouts, and even if all the regulations worked the way they were supposed to, the problem that I'm sort of thinking about and worrying about and working on every day of my life, when I'm awake at least, and probably while I'm asleep, is this problem, which is that we've got a economic system which organizes around this concept of efficiency. And what we mean by that is that we have this thing called the planet, and if someone wants to help me draw it, there should be something called civilization sitting on the planet, but I couldn't figure out how to draw that. But obviously, there's the physical planet, there's the non-human life on the planet, and then there's the human life on the planet, which is civilization. Those are, in our economic efficiency sense, thought of as raw materials. Land, labor, capital are raw materials into this thing we call the economy. And the economy is organized around efficiency, which from a financial perspective means optimizing return on financial capital. So it kind of looks like this. And of course, you guys are all smart. You're at Middlebury. You know where I'm going with this. And by the way, I had a lot of help with that. That was part of the slide. This is kind of what it should look like. And in a nutshell, that's our problem. If we had a financial system, both theoretically, sort of the theoretical framework for it, as well as how it was practiced, that understood its role as serving the real economy, which understood its role as serving humanity, it's a human economy, which understood that it was embedded in the biosphere. There's no such thing as the economy and the environment anymore. The economy is part of the environment. And so when we have environmentalists and environmental issues and special interest groups that are fighting for the environment, we've already lost the fight, because the problem is that these things are no longer separable. They never were, but at smaller scale, it kind of didn't matter. So that's the challenge we're dealing with. So what do we do about that? So I'm on I'm really excited about this idea called regenerative design, regenerative economy, regenerative capitalism. This word sustainability has kind of been so overused. We never really knew what it meant, and now we know we don't know what it means. And it turns out in natural systems, they are sustainable only because they're actually regenerative. And so, our bodies are regenerative. That's why we stay alive. We stay in far from equilibrium. If we die, our body temperature goes down, we turn to dust over time. We're breathing, we're warm, we can talk, and so we're in this regenerative mode, which requires sleep on a regular basis and requires eating healthy. And there's a field of architects who have sort of applied this idea of regenerative design to buildings. And I think the next stage is to try to take those principles and apply it first to companies and to enterprise, and then to the entire economy. And one of the projects I'm working on, which you can find on our website, is we call it our field guide to investing in a regenerative economy. And it's, the idea is that investment is driving the economy. So if we want a regenerative economy, we need to figure out how to invest in regenerative enterprises and think about the whole system as a regenerative system. So why do I focus on investment? And this will hopefully get us into the subject of impact investing. And before I launch into the investment, let me just make a couple comments on alternative currencies to put what I'm going to talk about into some context. There's not nearly enough people who understand our money system. And there's a very good little book written by the New Economics Foundation in London, and I forget what it's called, but if you go to their website, you'll find it's about this thick, and it explains how money works. And they've been amazed that even inside the Bank of England, a lot of people don't know what's in that little book. So if you want to get a good primer on how money works, I'd highly recommend that little book. It's called something like How Money Works, or Where Money Comes From. I think it's Where Money Comes From. That's all right. But so on the one hand, I'm talking about sort of these macro systemic issues, and then on the other hand, I'm very intrigued with a project like Berkshire's and Time Dollars and whatnot. And there's thousands of these local alternative currency initiatives. So two things I would say. One is the biggest one, and the one that's been around for the longest, is in Switzerland. It's called the VIR, W-I-R. It's a business-to-business currency, and it grew out of, I believe the history is it grew out of the Depression. So one insight that I've learned about these things, and I'm not an expert in alternative currencies, is they tend to spring up. The higher the economic stress, the more likely they are to grow up. And when the economy goes through cycles, they tend to expand and contract. When the economy is good, they contract. When the economy is bad, they expand. And there's data on that on this VIR example in Switzerland. And by the way, the VIR example in Switzerland turns over billions of euros or billions of Swiss franc a year, as I understand it. So this is not a pilot project. It's been around for decades, and it's real. Interestingly, also in Japan, when Japan collapsed in 2000, roughly, 1990 is when their stock market first crashed from a very high level. In the 2 decades, roughly, whatever that is, since then, I'm told 600 alternative currencies have grown up in Japan. So this is an interesting idea, and it's really hard to start and implement on the ground, but it's part of a bigger conversation that I'm really interested in, and so we need these pilots to be doing the hard work on the ground, and we'll learn from them. But my interest is, so that's a piece of the challenge, and again, looking to natural systems. It mimics nature. Nature is incredibly diverse. We've got a monolithic money system that's not in sync with how nature works, so it's natural to think that a much more diverse currency system would have some benefits. But the one area that I'm really interested in as the lever to shift our economic system is investment. And the first thing I need to say is that when I say investment, I'm talking about economic investment or real investment, not financial speculation. And part of the problem is when people say investment, we all start thinking, oh, that's like my 401k, that's what Fidelity does, that's buying stocks, that's buying bonds. And most of what we think of as investment, I would call speculation. And if I buy shares of IBM or Exxon today, and then sell them 2 years from now, it's done nothing to IBM and Exxon's decision to deploy their real investment capital. Okay, so I'm making a distinction between what Exxon does or IBM does with their capital expenditure, or the US government, or the local government for that matter. I'm making a distinction between that and buying and selling stocks and bonds. And I have this formula. This is, how many people are economics majors in the room? Less than half. Good for you. Good luck. So if you studied kind of Econ 101, and this is, with all deference to all the problems with GNP as a measurement tool, I completely agree it's a horrible thing to measure, but it's a simple way to describe the economy, so I'm using it with all those caveats. GNP is defined as consumption plus investment plus government spending plus net exports. So let's just focus on the first three of those. Exports a little bit complicated, not relevant for what I'm going to say. Consumption is something like 70% of the US economy. So when we think about sustainability, it's natural to say, well, we need to focus on consumption and we need to learn how to green our consumption, reduce our consumption, blah, 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 blah. Fully agree. What I would suggest is that, and government spending is one that we haven't really tackled yet, but particularly this government, the ecological footprint and the social implications of how our government spends the grillions of dollars they spend every year is a huge deal, and should be part of this conversation. But investment, this is typically, private sector investment when you see it in a formula like this, although it includes some government spending should be classified as investment, like when we build roads, for example. But my argument is that how we invest money today will determine the quality and the scale of the economy of the future. So if we can intersect the flow of investment capital and steer it one way versus another, it's a massive leverage point. And you have to remember, if a company invests in, say, a Hummer plant and builds Hummers that get 8 miles a gallon, well, you're going to then have a company advertising to convince us all we need to have a Hummer to feel like big men, or big women perhaps. And so there's a huge tail that goes with the capital investment decisions that mostly large companies make, but also small businesses and even some individuals. So I'm really interested in shifting the economic system through intersecting at the level of investment. So here's just a couple of ideas, and this gets to this idea of impact investing. How many people have heard of impact investing? That's interesting. So most people. So it's now hot, right? It's cool. And you can go to a conference in California, SOCAP, and there'll be 1,000 people there. And it sort of reminds me of when I went to a .com conference in 1998, when it was all the buzz. It's not quite that crazy, but it is exciting, and it's really exciting for young people because it's a way for them to kind of engage in building this new economy, invest in companies that are doing interesting things in the new economy, B corporations, socially driven enterprises that have a social purpose rather than purely a financial purpose. What I like to say about impact investing is that on the one hand, it's fantastic, and I do that myself. So I'm an impact investor. The last thing I want to do is be critical of it. Having said that, if we think of impact investing as another asset class, sort of there's stocks and there's bonds, and there's emerging markets, and now there's impact investing, we're toast. Because what matters is all of the I, not some incremental little slice with 2% of our portfolios on the edge. What matters is the flow of the big I. And so here's an example of an investment made, in this case in Dubai, that has impact. I would argue every investment has impact. Anyone aware that you can go skiing in Dubai? I mean, how crazy is that? Dubai is a desert. This is a building with air conditioning running, 12 months a year, 24/7, lights, slow blowing equipment, and that's just crazy in a world where energy. We need to get off fossil fuels. We need to conserve energy, and think about the tail. Don't blame this poor guy in the ski coat for buying a $20 lift ticket or whatever it is. We need to intercept that investment before it ever gets made if we're going to shift the economy to something that actually works on this planet. Here's another one. I don't know if you guys have ever done a Google search for pictures of tar sands. They kind of depress you, but it's so big, a photograph can't do justice to what's actually happening there. The ones that are taken from far enough away, they kind of lose any granularity, and the ones that are up close, a piece of it don't give you the scale of it. So, here's what's actually happening. We're carving away the earth, and then we go digging down from there to process this, or to dig up this and mine this oil. The beauty of the pipeline protest, the XL pipeline protest, is that it's intercepting the investment capital before it's made, so that the investment capital to expand this project never happens. Because if there's no pipeline, and of course there's other ways out, so we have to stop this pipeline as well as others, but and other routes to market. But if the initial investment is not made in the pipeline, the investment in the project won't be made, and then we don't have to convince 1 million people to not drive their cars using tar sands oil, which is impossible. So again, my point is that if we can understand that investment is where we want to, move our energy, I think we'll have a much faster or much more effective way to shift the course of the economy. And this is where impact investing comes in. And there are a number of people now. There may be 1,000 people that show up at the conference, and maybe 50 of them actually are doing anything, and the other 950 are talking and thinking and exploring, which is fine. But this is a nascent industry. It's mostly high net worth individuals, private foundations using their own capital. It's you're not seeing General Electric show up at an impact investment conference, and it tends to be early stage companies, very entrepreneurial kind of culture. But it's growing, and it's been the idea has been around long before the term, and this is definitely I would say a leading edge idea of reorienting where the flow of capital goes. So I want to talk a little bit about the one project that I'm very deeply involved in, and this is the one that I'm involved in with Alan Savory. And Alan actually just did a great TED Talk last week. So if you're interested in this, go to the TED website and you'll hear his talk. So he read this paper I wrote about Schumacher and economics, and he said, this guy seems to understand something about holistic thinking. And we have this challenge of trying to reverse desertification on the planet, and we're a bunch of consultants running around trying to teach people stuff, and boy, wouldn't it be nice if we had some capital to actually show how this works, create some pilot projects, and prove and measure the data. So the project is around the desertification crisis, and this is one of these big hairy problems that when you start to learn about it, you get yourself really depressed. The punchline is that 40% of the land-based planet is grasslands. Think Nevada, South Dakota, North Dakota, Montana. Usually, people tend to fly over the grasslands in airplanes, people that live in the wealthy north. A whole lot of people make their living with small herds on the grasslands in the not wealthy south. But in nature, the grasslands used to have massive herds of large animals roaming around. And the large animals would eat the grass and stay in herds to protect themselves from the predators. And because they're in large herds, they're essentially defecating in their food, so they kept moving. And the result of that was a very symbiotic relationship with the grasslands, which made the grasslands healthy, which in the process sequesters carbon. The reason there's 14 feet of soil under Iowa is that it's a massive carbon sink. It's the second largest carbon sink after the oceans. And Alan's is on a life, mission to change the land management practice so that we regenerate these natural carbon sinks, and also, essentially avoid the floods and droughts and starvation of lots and lots of mostly poor people in the south, in the southern hemisphere. So here's a photograph, and of course the conventional wisdom is that overgrazing causes desertification, and desertification is essentially, plants getting further and further apart until you have nothing but desert. And so presumably the picture on the right seems like the one that must be overgrazed, and the one on the left seems like the one that's healthier. Well, it turns out that the one on the right is conventionally grazed, and the one on the left is grazed with, in this case, 3 times as many animals per acre as the one on the right. But not just left out there on their own, they're actually herded using electric fences and cowboys to mimic how natural herds work. And so it doesn't take too much imagination to think that the land on the left there is more resilient. And by the way, this photograph is off of one bridge looking up and downstream on the same day. So it's literally, that's the neighbor of the same ranch. If you can imagine if healthy grass means more grass growing, which means more carbon sequestration, you know, and this is just one little ranch, you can see the potential there. Here's a couple other photographs. This is the one Alan used in his talk. And let me point out see the little ridge line over on the left where the mountains are? So this is in the desert in Mexico. And keep an eye on that little ridge line, because you may not recognize, you know, there's this steep hill here and that little lake. After many years of holistic management using this practice that mimics nature, that's what that turned into. Now that's admittedly an extreme example, and you might wonder what happened to the pond. Well, it turns out that pond was man-made. And so when the owner of the land saw what happened, he said, you know, I've done everything wrong, and so I need to undo the reservoir he built. And so now that's a natural wetland. But that's the potential of what we can do using holistic management. And so I'm an impact investor. I've set up a company with another financial partner and with the Savory Institute to create a ranch management company that goes around doing this on either ranches we acquire or ranches that other people owns, and you know, working with big partners like the Nature Conservancy and working with some clients that want to acquire ranch land and have us manage it, and working with projects that are involved in you know, multifaceted projects that include grazing. You know, we're even going to go after the U.S. military. They own massive amounts of grasslands on the Army bases. So that's an example of, you know, impact investing that has this regenerative quality. And I think of it also as a metaphor. You know, if we can go from that to that, you know, the challenge is how do we think about doing that for the entire economic system, and not just around natural capital, but also around social capital. And you'll see in our field guide to investing in regenerative economy, we talk about projects that are, for example, in inner city Cleveland, and that use this idea of anchor institutions and cooperative ownership. That the metaphor can be applied to both social well-being as well as our ecological well-being. And ultimately, you know, what's scarce is no longer financial capital. Someone told me there's going to be $900 trillion of financial capital by 2020, which I can't even comprehend what that means. And what we're going to be short on is natural capital and obviously social capital for lots and lots of people on the planet. And so capitalism needs to sort of tweak itself, and I believe it's possible. I can't tell you how, but I believe that a capitalist system that measures more than one simple kind of capital can be made to operate in a sustainable way. And our job collectively, and this is a job for the rest of all of our lives, is to usher that new system in and help it emerge. There's not going to be any quick, you know, here's the memo, go at it. It's going to be a painful, challenging, lots of hard knocks transition. It's going to be a great transition, but I believe it's a very exciting time to be a part of it. And you know, and I think people in their 20s are going to have a bigger influence on this than any set of 20-year-olds have had on the economy, perhaps, I don't know, in a long, long time. But that doesn't mean it's going to be easy. And maybe I just end with a very short story or anecdote, which maybe is a parallel. My father passed away 2 years ago, and he fought in World War II. And he was on the D-Day invasion. He wasn't on the beach, but he was in the Navy, so he was on a ship, and he fought in the Pacific. So he saw a lot of unpleasant things. And I was on a trip with him maybe 5 years before he passed away. He was still relatively healthy, and it was sort of my first chance that I'd had, you know, a 3-day weekend, just me and my father. And so I wanted to talk to him about his life, and I to talk about his life. He tended not to talk a lot about himself, and he kept talking about the war. And what occurred to me was that, of course, his family, his wife, his children were probably by far the most important thing to him. But what he kept coming back and talking about was the war and the purpose he felt being part of that experience. And it wasn't fun, and there are memories he's had that he won't share with me, or he didn't share with me. but at age, he was probably 88 years old then. That was what defined his life. And I think we all need to go into this challenge ahead. I don't mean to sort of make this, I don't want to freak anyone out, but if you guys hang around Bill McKibben, I mean, if you're not freaked out yet, you're not paying attention. It's not going to be easy, but it's going to be a great opportunity and very purposeful, I think, for all of us. And I encourage you to follow your gut instinct and find your place around this. And then the final thing I'd say is, I've sent around a little sign-up sheet. I hope people sign up for our newsletter. We are a very small little group, but very open to ideas on how to get more college-age and young professionals engaged in the work. So put your thinking cap on, do a little research on our website, see what we're up to, and send us your ideas. We'd love to have your help. Thank you. Question in the back.
Yeah, the conventional alternative to, say, traditional investing.
Take your hat off. Stay one.
Well, I will, but I sometimes forget. So what happens is you'll have socially responsible investing. You're trying to impact certain sectors and so on, but you're always going to be sort of looking at return.
Yeah.
So in your model, how do you define return in sort of maybe that conventional sense of a number, as well as sort of an expanded sense of all of the positive outcomes?
Yeah, great. I mean, bingo, like rifle shot question, right? Thanks. That's an easy one. So the impact investment space has sort of gravitated toward two buckets. We like buckets. There's I'm an impact first impact investor, and I'm a financial first impact investor. And financial first means I want to do all this good stuff, but I need a market rate return, whatever that means. And then the impact first crowd are kind of like the crunchies, the diehard, the damn the torpedoes, I'm just going to do this, the lunatics. And I think it's a false choice. It's kind of our classic, we're trapped in a paradigm that forces us to do that. And then the other thing we force ourselves to do is to measure all the stuff we're trying to accomplish. And if I'm trying to accomplish love in my family, I'm going to figure out how to measure that, right? So it assumes that anything that matters can be measured, which of course we know intuitively is not true. And if we study any of the spiritual traditions in the world, we know that's not true. But we put our economics hat on and we say, well, if it matters, it must be measurable, so we have to measure it. So we're in this kind of dysfunction, and my only way to deal with it is to avoid that distinction and to not naively, but to invest in a holistic way which holds all of these things together. And in the grasslands, I mean, things don't work out the way we smart people think they do. So, we invested in a few ranches, and for me, fairly significant amount of my capital. And, then we run into a drought. So the returns on the ranches are lower than we thought. But because of the drought, land prices are skyrocketing. So, I've made way better returns if we were to sell the ranch, which, by the way, we have no intention of doing because we're not looking for an exit. That's another problem with our investment model. But if we were to liquidate the ranches, we do way better than the stock market or any hedge fund or any market rate return that anyone thought about. So I just sort of avoid that issue, and it doesn't mean you need to be rigorous and think about whether an enterprise has a real viable business model. But if you invest for a very long period of time, and you have reasonably good judgment about what a viable business model can be, enterprises become living things that then become worth something over long periods of time. And I just don't deal with the return question. Now, if you're the endowment of the Middlebury College and everyone's looking at you on a quarterly basis or an annual basis, you have a different problem. But you can't solve that problem without redefining the purpose of the endowment. That's maybe the best way to say it. maybe we should try someone else before we circle back. Yes?
I'm just wondering, so you said earlier on that impact investing can't be, or toast if we relegate it to its own asset
Yeah.
category. I'm just wondering, advice.
That's a technical term, toast.
While we, as like the divestment campaigns, while we have our
Yeah.
trustees' ears on how to responsibly manage the endowment,
Yeah.
something that I would like to pitch to them is, hey, just at least please put some of your money in these SRI firms or anything like that. And I, maybe as a percentage of the endowment, as it's an asset category or anything else
Yeah.
like that. But I mean, how would you recommend we start doing that if creating another category for it is going down the wrong road in the first place?
It's such a hard challenge. So here's what I'd want to see happen with endowments, is that they would say, we don't want to speculate in stocks. And there's this thing called modern portfolio theory, which made it okay for us to all get invested in stock trading strategies, but modern portfolio theory failed miserably twice. And yet everyone still uses it, but it's completely bankrupt as far as I'm concerned. And yet your endowment and everyone's endowment still, whether they say it or not, they basically manage their portfolios using that as a theoretical framework. And of course, the principal problem is that it doesn't address the nonlinear tail risk, once in a million year storm events that happen every 5 years now. And real investing, so if I were in charge of the endowment, I would say, we need to invest this capital. It needs to generate returns. Some of it needs to generate annual returns because we subsidize the scholarships and salaries of the professors, blah, 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 blah. And by the way, I don't know what Middlebury's share of their operating budget is covered by their endowment, but a friend of mine who knows the numbers at Harvard told me that 70% of their annual operating expenses, ex the law school and the business school and the other sort of self-contained businesses, is from their endowment. So, they have a problem. You can't have 70% of your budget being paid for by something that you say, well, don't worry about it. We're going to try something new, and you should be a long-term investor. They need to pull money out of that every single year to pay salaries and to enable students to attend. So this is a very, very complex problem. But an idea that came at us, which I think is really interesting, is to challenge pension funds and endowments to actually make real investments in real enterprises. Not necessarily startup enterprises, which are always risky, but real enterprises. And that's hard work. And that's not sort of giving your money to some fund manager who allocates it a bunch of stocks and we meet once a quarter and yeah, it's good, yeah, it's bad, let's go back to work. It's actually stewarding that pool of capital. But if you're going to have the pool of capital, then I believe you have a responsibility to actually steward it, and that means find real enterprise investment opportunities. And I think if I don't know how big the endowment here is, but if you're Harvard management and you've got $30 billion or something, and you put out a request for proposals to make real investments in real enterprises that are in alignment with the new economy, you'll get lots and lots of interest. So that's what I would suggest. But that's a multi-year task. Yes, sir.
Thank you so much. You're very enlightening. I would like to ask a question about the Spirit Level. I'm sure you've read it.
Yeah.
But I should tell the rest of the room what that book is. The Spirit Level is a book from Britain, written by a couple of researchers who are interested in the epidemiology of wealth disparity and the impact on society. And they found a direct correlation between wealth disparity and all social ills, and crime and environment and everything else. So with that said, you read the book. I wonder what your integration
I've seen their pitch. I haven't actually read the book, but I've seen the charts, put it that way.
Okay.
Which I use the charts. They're amazing.
So I wonder what your integration is of that around the question of wealth, because wealth disparity, you're talking about what people with wealth are doing with their wealth. How do you integrate with this research that shows that great excess wealth is harmful to society?
So hard, real hard. So one idea is, the form of ownership of enterprise has evolved to be the public corporation is the default setting. And the way it works is, the entrepreneur starts a company, gives away as little equity as they can, and then if it's successful, it goes public, and then the ownership transfers to a bunch of random people who trade stocks all day long, and the wealth accumulation sort of rests with the founding people, like the Walton family we heard about earlier, which those statistics are stunning, or the kind of the management class that manipulates the wealth out of the corporation at increasingly egregious levels, or the people that already have the wealth because they're the ones that can afford to buy the stocks in the first place. And so what Gar Alperowitz likes to say is we need to democratize wealth, and one way to do that is through cooperative forms of ownership. And I gave a talk last year at the annual co-op convening in Canada. There's thousands of people there, and the cooperative economy is massive. There's more people that work for cooperatives than work for global corporations. So, there are some solutions. I'm not saying cooperatives are the answer to everything. They have plenty of their own problems, but somehow democratizing the ownership of business enterprises is to me, that's a much more promising way to get to where we want to go than government taxing and redistributing and all the brain damage that comes with that. I think if we can build wealth more broadly, we're in better shape.
I have a follow-up question, but let other people ask.
Yes, sir.
How much does this need to be moved into the political sphere? A lot of these ideas and even these interventions, have been around for a long time. 50 years, 100, depending on what track you want to look at. And basically, the macro trends haven't changed very much. And it does, it seems to me, looking at the next 40 years, where undergraduates will be over the next 40 years, it's hard for me to see systemic, large-scale change taking place. Unless it becomes a political movement, unless it moves into the political party system, unless the parties in different countries start talking to each other, unless politicians start paying an electoral price for not caring about these things. But I'd be interested in your thoughts about that.
So I certainly agree with you. That tends not to be my thing, so that's not where I tend to focus my energy, but that doesn't mean I don't think it's important. Gus Best likes to talk about, we need a political movement for sure, and obviously Bill McKibben shares that view. I would, are you a professor here? No, just happen to be. Semi. I actually think perhaps equally important and ultimately more important is we need to shift what we're teaching in universities. Because if you graduate from, I have no idea what Middlebury teaches in economics, but if you generally follow the economics textbooks, the law, ethics, certainly finance, which I know more about, it is literally taught in a way that has not caught up with the advances in science. So economics is grounded in Newtonian physics. It's really that basic. And most people in the world don't really know why quantum physics matters, much less could explain it to you, or the other way around. And same with the new biology. Most people think that survival of the fittest is how biology works. Well, it turns out that's not true. And yet, all of our business economic framework is still grounded in Darwinian biology and Newtonian physics. And we're actually working on a project on this. There's a couple of scholars that are leading this, and if you're interested in this question, we have a project on our website called the Third Millennium Economy Project, which is going to transition into a project called Education for the Anthropocene, which sort of rethinks the intellectual map that we use to influence all the institutions that essentially run the world, including the political institutions. So, I don't think we could articulate to a politician what it is that we need. I think we're so lost. We need to do the, I mean, it'd be easy to say, well, we need to burn less carbon. But to articulate how an economy would work that doesn't depend on exponential growth is no trivial challenge. And of course, the politicians have the challenge of if they were to take a risk, they get immediately unemployment if they start tweaking with the system. So this is no, I mean, actually, I guess I differ a little bit. I think we've had lots of these problems, but I don't think we've understood the magnitude of this problem. I still don't think we understand the magnitude of the problem. And until we have a map of where we are and where we need to get to, it's going to be pretty hard to start a movement to demand what we want because we don't know what we need yet. That'd be my, yes, sir.
John.
I think this is, by the way, I think this is going to be the last one. We have a couple of wrap-up things we need to do before we exit the building.
And I just want to say that there will be a chance to talk more during the
Yeah, I'll be around.
Okay,
So-
so just following up on this, so it's a sort of a political question, but you mentioned earlier that you were a follower of Schumacher and The Smallest Beautiful Thing, and if we listened to earlier today, you know, a lot of the stuff is around localism and small scale, and yet you're presenting a model here of sort of large scale, sort of national level or global level investment. Now, how do you draw the line between them? If the obvious direction we have to go in, some agreement is into the small scale.
Yeah, I think decentralized is a critical design feature of a regenerative economy. That's again in completely in alignment with how nature works by and large. But that doesn't mean that everything's going to be decentralized. I think it's easier to start at the local, and so there's lots of bottoms up stuff growing, which is fantastic. But there's no silver bullets, so it's not like, oh, I have the answer. It's localism. I guess I've sort of picked it's kind of like there's this massive rock, and everyone that sees the rock sort of finds a place and starts chipping away at it. And I know a massive place to chip away is the flow of macro investment capital, and so that's where I've picked. That doesn't mean it's the silver bullet. I think ultimately there's going to be this much more complex emergence of global, regional, local, but we don't have political institutions to manage that. We're organized around nation states. That is an idea that came prior to us having any understanding of the global ecological issues. So we have massive amounts of work to do. But I think it's a both and, not either or. So anyway, thank you very much for sticking with us, and again, we're happy to keep chatting.
Before everyone leaves, thank you so much.
Wait, I have to say one more thing.
Yes.
Follow us on Twitter or Facebook, and
them
sign
on
up for
Twitter.
our newsletter and all that good stuff.
Awesome, great. I'm Rachel. I am manager of organizing and development at the New Economics Institute. I coordinate our campus network program, of which this event is a part, and it's actually one of the first events that we've got going this year. We have 14 of them happening on campuses across the country this year. In a minute, I'm going to ask our friends from UVM to talk about their event in case you haven't gotten enough and you want to get over there next month. But I first want to acknowledge the organizers of this event today, who did a fantastic job. And I'm wondering if they can stand up so that we can appreciate them for a second. There are more of them who are not here.
Raphael and Nat.
Raphael and Nat are not here, so thanks, Raphael and Nat. It's on video. We thanked them. And I also want to recognize Emma Beals and Mike Sandmel, who are our campus network organizers who've been working with the organizing teams at these schools and have been live streaming. And if you all are interested in sharing stuff that you heard today with a larger audience, the videos that we live streamed are up and are sort of semi-permanently available if you want to do that. And so I think that's it for now. Just big, huge thanks. And if folks from UVM want to very quickly just tell us about their event, that would be great. Thanks.
Yeah, sure. I'll be very brief. I also want to congratulate the Middlebury organizers. This was awesome. And it's important that we view all the organizing efforts here as just a continual process of building momentum and learning from this knowledge and then applying it. So in that light, I'd like to invite all of you guys to participate in the VT Economy Series that's going to be held in Burlington at the University of Vermont over the next month. There are going to be 6 events. The first one is going to be on April 3rd, where we're trying to bring together different members of different divestment groups as far as colleges go, and 350 Vermont, and efforts in the state pension to divest. So we can just coordinate and share tactics and strategy. Following that, on April 24th, there's going to be the Rumble and the Econ Jungle, debate between 2 prominent ecological economists at the Gund Institute and 2 prominent neoclassical economists at UVM. And so, you know, save the dates. The final summit's on April 27th. Contact us at studentclimateculture@gmail.com. And, you know, just in summation, what we think is really important is to both learn from the experience that we have here and strengthen the working relationships between not only the divestment movement or the impact investment movement, but all these different movements. Because it's only by understanding each other and then coordinating that we can avoid the multitude of problems that are facing our economy and, you know, build a platform for a more sustainable future. Specifically, we're focusing on ownership structures. And obviously, you can hear more about it at the summit. So thanks so much, and well done, you guys. This was awesome.
A couple of things I want to add on to that. Sorry, that was ill-timed. First, the first event is actually in the last week of March, but that's not an important one.
We have like 1 minute.
Alright, so the summit originally, when we were envisioning it, we're aiming to talk about ownership structures, and it was a localized idea. There are like 5-6 events happening on the Burlington campus, but in doing all this, we've been getting in touch with more and more people, and the idea arose to try to create a better network and have more and more events throughout the rest of the state. So we're probably also going to have events, you know, not us organizing, but are trying to work with people to also host events related to these new economics ideas in, like, at Vermont Law School, at Green Mountain College, and basically at as many other places as possible.
So don't hang up your organizing hats and contact us.
Right.
We can all work together.
Policy people we're working with that we can make better change happen. So we'll be in touch, please.
So thank you everyone so much for coming here today. I know that a lot of people had to leave already because of tight time schedules. I'd just like to thank you all once more. Rachel made great thank yous around, so that's wonderful. Sean, thank you again so much for giving us this wonderful talk. And if anybody would, you all are welcome to come join us for dinner, which is going to be right now in FYC Annex, and that is for students know it by the Hillel space. And there are little signs showing also where to go. You can get there by getting out from 1 floor up outside and then walking straight ahead, and then you will see signs on your left.
Or can we follow you?
Yes.
Okay, great.
Yes, you can follow me. And there will be chili, vegetarian option, and also our wonderful griller catering promised to get all ingredients that were feasible locally. So, thumbs up for them.